Welcome to Cambridge House Live. I'm Bridget Anderson. Thanks for joining us today. And joining me now is Gordon Chang, the author of The Coming Collapse of China. Gordon, you're going to be debating Frank Holmes coming up later in the program. You're going to be doing that, a lot of anticipation about that. We're going to be talking about your book, The Coming Collapse of China. Let's start there. That book was written in 2001, and it's now 2012, yet a lot of it still holds up. So looking back over the last 10 or 11 years, have events panned out the way that you thought they would?
Well, in the book, I said that the Chinese political system and economy would fail within a decade. So that's 2011. I'm about a couple months out of time. But what we're seeing right now is a real change in the Chinese economy, and it's a fundamental change where we had this super cycle upward for about 35 years, virtually uninterrupted growth, and now what we're starting to see is the downturn. In the book, I said that there were a number of changes in China that were really beyond the ability of the Communist Party to deal with, and part of it was trade. It's the entry into the World Trade Organization, which would cause changes. One of the things that I hadn't seen was countries were pretty indulgent of China's mercantilist policies, and so they didn't call China on a lot of things. But that is starting to happen now. There's real change in the way the United States and a number of other countries are now approaching China on trade, and we saw that in the Trans-Pacific Partnership announcement in November, where it would have been inconceivable even a year ago that Pacific Basin nations would launch a major trade round in Asia and exclude China.
So you still believe that China's going to collapse? You still see the end, but when do you see that happening, and what do you see will be the key events that will make that happen?
I sort of see this in this year or next year, very, very soon. And part of it is because the Chinese economy has turned. We're starting to see growth slow, property prices plunge, industrial production fall off, a number of key indicators stagnate. But what we've also seen is Chinese people and businesses starting to get their money out of China. That started in November. In November and December, about $92 billion left China. The reserves fell by that amount. So we're seeing capital flight, outbound hot money. And I don't know exactly what will trigger the problems in China, but I think perhaps it might be Europe, because Europe has an unsustainable system. China is very dependent on Europe for exports, and part of the problems that we've seen in China since September in the export belt have been really triggered by a collapse of demand in Europe, and that's now affecting China, and in China in ways where the Communist Party can no longer control the economy.
You know, there's a lot of people who wouldn't agree with you, and Frank Holmes is one of them, and we'll hear from him later. Why do you think that the information that you're talking about now, why is that not getting out?
Well, you know, it's sort of natural, because for decades we have seen China just grow from strength to strength. And so, of course, we just sort of extrapolate and draw the straight line out and say, yes, it's going to continue forever. And that's really what's been happening, as people say, well, you know, China's going to become the world's largest economy in 2041, 2027, 2020, 2016. But really, I think the problems are that the conditions that created that growth either no longer exist or are disappearing fast. And so essentially what we have is a new situation where we're not going to see that same growth, and we can no longer draw the straight line upward.
Is there not still a real driving need for energy? I mean, that's one thing that we hear in Canada and British Columbia particularly.
Yeah, and we're going to see that. We saw Premier Wen Jiabao go through his three-nation trip during the Gulf just last week. And really what he was there to do was to sign up alternate sources of energy, because they're becoming very concerned about China's reliance on Iran's oil and gas. And so what they're trying to do is diversify their way out of that. And also they'll buy energy from anywhere, but I think that they don't believe in the spot market, and so therefore they insist on having their own sources, which I think is going to be a problem, because they're paying too much for what they're buying, and essentially they're going to not need all the energy that they've acquired.
You know, I think there's a lot of people here at Cambridge House that are, looking at China to see how that is going to impact what they're doing. And you look at the Vancouver market and the Canadian market. So what do you see? If you see a real change in China, how is that going to impact some of the companies that are here today?
Well, I think there's going to be an entirely different China, and I think the economy is going to be at a much lower level than it is now. So people who are investing in China on the expectation of continued growth are probably going to be disappointed. But since we are in Vancouver, I think one of the great news is for Vancouver real estate, because we have seen even Bank of China surveys talk about almost half of this China's super rich want to emigrate. And if they're going to emigrate, they're probably going to go to Sydney. Yeah, they'll go to Melbourne. But what's their favorite city in the world? It's Vancouver.
So that still is good news for here.
That's good news for here, because we're going to see more of that. As I said, starting in November, we saw money gushing out of China. This capital flight is going to continue, and that's going to benefit countries like Canada.
Well, let's go back to some of that hard data, because as I mentioned, there are lots of people who wouldn't agree with you. So does the hard data back up what you're saying?
Well, what we see, for instance, is that growth in Q4 2011 was 8.9%. That's the fourth straight month of decline. That number, though, is probably inflated because it doesn't correlate with what else we know about the Chinese economy. And that 8.9% figure was well above the consensus estimates in both the Dow Jones and Bloomberg surveys. So what we're seeing is electricity consumption is starting to decline. Car sales, which is a bellwether for consumer sentiment, is pretty much flat. Commercial vehicles are down quite a lot. Industrial production, as measured by the HSBC Purchasing Managers Index, is now down 4 straight months. So we're starting to see a real change. China hit an inflection point probably in September, and we're going to start to see for quite some time negative numbers come out of it. One thing that's really interesting is that Beijing is not really taking the steps that are necessary to turn the economy around because of the political transition there, and that's going to be a problem for China.
So what do you think needs to be done then, given that there could be some changes politically?
They've got so many tasks. The most important thing they need to do is to rebalance their economy away from investments and exports towards personal consumption. China's been moving in the wrong direction. China has maybe under 34% is the role of domestic consumption to the Chinese economy. No country has a lower rate, and that number has been falling in the last 5 years. To turn that around, they've got to make some fundamental decisions which they're not willing to make. And that means that they're still going to be too reliant on investment and exports. Exports aren't going to do well. Investment is now just sort of, they've built all the ghost cities that they can build. So they're going to have a real problem now.
One of the things that you spoke about here at Cambridge House, and also you mentioned in your book, is the impact that demography plays in China. Tell me a little bit about that.
The Chinese workforce is going to level off perhaps starting next year, no later than 2016, and then it's going to fall. The country itself is going to level off somewhere between 2025 and 2020. China's growth plans, and really the expectations of investors, are that China's population will continue to rise, but China is going to really run out of people to power its economy.
Okay, so when you say China's going to run out of people, I think that would surprise a lot of people that you would say that. Is that really true?
Well, the Chinese population will level off. The workforce is going to start to get smaller. And this is just demographics. Even Chinese demographers say that this is going to happen, which really means that you're not going to have, China benefited during the reform era by its demographic dividend, which was this extraordinary bulge in the workforce. That's just about over, which means that China's growth is going to have to be in spite of demography, not because of it.
So do you see that there would be a change to policies like the one-child policy?
You would think so, and Chinese demographers, at least in private, have been saying for a decade that the policy had to change. But I think it won't change, and the reason why we haven't seen it change is because the one-child policy gives the Communist Party extraordinary control over people's lives, and especially in the countryside where party mechanisms have really started to waste away. The one-child bureaucracy gives the party stability in the countryside, which is critical for them.
Now, that kind of government control, we've seen that fall away in lots of areas around the world in the last few years. Why do you think it hasn't happened in China yet?
Because the Chinese government has been much more repressive. And I think China has been much later in the cycle than some of these other countries. But, we saw the Communist Party now being extraordinarily insecure by its reactions to the so-called Jasmine protests last February. And what we have seen over the last 5 years or so, an extraordinary increase in the number of protests, but even worse, their violence, the volatility in society, which says that basically the party is no longer able to mediate conflict in society. So we're starting to see late cycle behavior on the part of the leaders, and that tells us that the political system is pretty much at the end.
I think there's a lot of hope that some of the younger generation in China will be able to force that kind of change throughout the population. Do you think that there is enough of a movement growing that could happen? And how long? I mean, you keep saying like maybe a year, maybe two, but is that a little bit optimistic?
Well, we'll see, of course. One thing, though, I think that when you look at people in China, it's not only just the young, is that most people believe that a one-party system is no longer appropriate for China's modernizing society. So this whole system of Marxist-Leninist thought, which the government is reinvigorating in the schools and in society, it really is a reaction, I think, to basically an understanding that the Chinese people want more say in their lives. This is really a problem for a one-party system. And so we're seeing this conflict, basically the Chinese people pushing up against their political system, which is relatively intransigent. And although a system like that can remain in place for some time, eventually it's got to give way because no government can stand against all of its people all the time.
I want to go back to what you were talking about, the Eurozone and that kind of economic impact. Where do you see that playing into what's happening with China?
We've already started to see it in September, where the orders from Europe started to collapse for China. And that's when we saw factory owners start to flee because they couldn't pay their debts. We saw some factory owners commit suicide. We saw a ramp up in worker protests. And although China is saying that its exports remained healthy in the last quarter of 2011, we saw declining freight rates, we saw a drop off in air cargo volumes, we saw a very stagnant growth in container throughput, all indications that Europe is having a very big effect on the China's export belt, which is along the coast, and it's really a very important part of the country.
And you bring up an interesting point. So, I mean, China is very different when it comes to the cities and when it comes to what's happening in the small rural areas. Where do you see that fitting in? You know, there's been a lot of discussion about all of these, the people moving in from the rural areas and the agricultural kind of transition. And I was under the impression there were still lots of people who were really ready and willing to move into the city and lots of work for them. Yet your book, you don't agree with that.
No, I don't. And especially now where we see the population and the workforce starting to level off. Demographers in China and economists disagree. I mean, if you look at the under 35 cohort, which is the so-called golden age group, there's a question about whether how many more of them really want to move to the cities. You know, there's not really that big pool of workers. And in the 35 and over cohort, basically people want to stay on the farm. So yes, there are some people still in rural areas that will move to the cities for better jobs and things, but that game is pretty much just about over. If you look at the numbers, the people just aren't there. China has a very labor-intensive form of agriculture. It needs people on the farm, and that means that there's limited flexibility for people to just get up and go to Shenzhen in the south or Shanghai in the middle part of the country to work. That game is just about over.
So do you feel like people are listening to what you have to say? I mean, you've been talking about this for more than a decade now.
You know, it's essentially the hedge fund manager where, you know, people in the hedgies, they don't care one way or another, but you're starting to see them show real concerns about China because the cracks are becoming visible in the Chinese economy. And I'm not I can't say that I lead the majority view in the world, but nonetheless, you're starting to see more and more people like Jim Chanos start to talk about China being Dubai times 1,000. As he put it. And the reason is that you just start to look at the numbers and they don't make sense. You know, so, you know, we're starting to see, I think, a greater appreciation of the risks in China's economy.
Yet there's people like Frank Holmes, and you're going to be debating him, and
I can't help it if Frank Holmes is wrong, you know.
Oh, no, this is going to be fun. So what is your main message to Frank? Or are you going to save that for the debate?
You know, basically is what I said this morning, and that is that the conditions that really created the growth in China for more than 3 decades just aren't there anymore. We're dealing with a very new China, a China going into a political transition where leaders can't exercise wise economic judgment. And, you know, I'm sorry, but, you know, China is really changed. So if we were doing this debate a year ago, I'd be in trouble. But we're doing this debate now, and Frank is in trouble.
Okay, well, Frank Holmes is going to come up next, and I will ask him those questions. Gordon, thank you very much for joining us.
Thank you.